Broadcasting worldwide from beautiful Santa Monica, California. It's time to get real. What makes someone rich and successful while others stay stuck in the grind? How can you maximize your potential, live your dreams, and build your wealth? Taking an honest look at our world and the markets that move it. Let's talk to successful people and take a look inside their heads. Let's simplify success and spread the wealth. Let's prove the American dream is still alive. This is Real Business Talk with your host, Los Angeles expert realtor and entrepreneur, Robert Crawford. Call in now, 347-205-9356. That's 347-205-9356. Make sure you follow us at realbusinesstalk.com.
Hey, this is Real Talk about real business. It's Friday, November 17th, 2014. Thank you for joining us for this episode of Real Business Talk. I'm your host, Robert Crawford. I'm coming to you from sunny Santa Monica, California. It's a beautiful day outside today. And we have a great show for you today as well. Lots of important news happening this week. Today we'll be talking about how to grow money in real estate by buying cash flow condos. Everyone knows that real estate is a good investment, but I really wanted to spend some time today to break the numbers down, especially after what's going on in our economy. I mean, I've been spending a lot of time going in and knocking in on small businesses in Los Angeles the past week. And I really discovered that our economy is really hurting for most people out there. I mean, small businesses are getting crushed from every single direction, which means that they can't employ more people, and we're just seeing a downward spiral effect. Not to mention, inflation is over 6% right now. So the money that you do have, even if you have money in the bank, it's losing its value every single day. So if you do have some money set aside, how can you protect that and keep an asset, but that's not only going to protect that money, but grow it exponentially? The saying money doesn't grow on trees is actually false. The tree is sitting on top of real property, making it a finite asset that will likely increase over time. More importantly, real estate can get you a steady cash flow month after month. There's a reason the original Constitution was written for landowners, because beyond gold, dollars, and diamonds, real property has value and is useful. That's the biggest thing. It is real. It has special protections under the law, but it also is extremely useful. That gives you an ability to rent that property out. And that is really what is going to grow your wealth. Now, I think a lot of people get scared, especially when they hear real estate investing. Most people think flipping houses, and that's entirely separate to actually getting cash flow income properties. They're two entirely separate avenues of real estate. And yes, you could buy a house, rehab it or fix it up, and then rent that out. That would work as well. That's also a great way to increase the value of the property. But today I'm going to be focusing on cash flow condos and why I think condos instead of single-family homes are the best investment out there. The understanding is that all people want to own real estate, but the reality in America has now become a renter's market. Although the economy can be tough for many of us, if you have cash and credit, you should be buying property right now. We're in historic market rate levels, pushing interest rates south of 4%. I've seen interest rates going into 3.75, almost as the new standard if you have decent credit to purchase a single family. Now, if you're doing a 15-year, you can get an even better deal. Obviously, if you can avoid financing, that might be a good option for you. If you're sitting on a pile of cash, you might as well buy some properties, because then you can start cash flowing. And you're going to be having that property, and it's going to be paying you each month. But I would also consider leveraging that capital. If you're sitting on $1 million, you have the potential to buy 2 or 3 different properties. You just have to leverage it and find a great banker that's going to help you. You can find mortgage brokers at wearerealty.com. There's a big difference between mortgage bankers, mortgage brokers, and then hard money lenders. And we'll have another episode just on that, because if you're investing, a hard money lender might be a good option to go if you're low on capital, so you see a great deal out there. But investing in cash flow positive condos near universities and business centers especially will pay off. Why? It's the best way to guarantee a steady flow of money month after month after month. But it's important that when you're looking at properties, you have to make sure you're in the green from day one. You're going to be making a huge mistake if you purchase a property and then the expenses and mortgage payments and taxes, everything costs you more than what the rent is going to get. That's a very big problem to be in. So what is cash flow positive? Well, the free market determines the value of all property and rent. But in real time, in real terms, you can sell it for as much as someone is willing to pay. That being said, if you have a property that can get a fair market price for monthly rent, it would be a good idea to consider purchasing that. The opportunity could be your golden goose, as long as the expenses on the property is lower than the fair rental price. And the biggest concern I hear from people that do have capital, they're considering it, what I constantly hear is, I don't want to deal with the headaches. I don't want to deal with the problems that arise. I don't have time to drive over there every time something needs to get fixed. I don't want to have to collect the rents and worry about my tenants. Well, there's property management companies out there. And We Are Realty actually does property management. So you can always reach out to us and we could actually help you out. We have an East Coast and a West Coast division. But property management is just another piece of the expenses. You don't have to do everything yourself. And if you plan everything accordingly, it should all run smooth. But cash flow is the rent money left over at the end of each month, after the property's mortgage, taxes, maintenance, insurance, and property management costs are paid. Obviously, your goal is to have more rent money coming in each month than you're paying out in expenses. This is known as having positive cash flow. If the rent collected each month does not fully cover the monthly expenses of owning the rental property, you have a negative cash flow. And that's a position you do not want to be in. While positive cash flow is best, there are some instances when it may make sense to have a negative cash flow, especially for the first few years of an investment property. But we'll get to that a little later on. So I want to take a quick break right now, and then we'll come back to how we calculate property's expenses when you're considering purchasing that new property.
Friends, the current economic system is set up to reward the rich and leave you with nothing. Stagnating and declining wages makes it harder than ever to achieve your dreams. That is why we've developed a platform to allow you to raise the funds for the goals and the dreams you wish to achieve. Dream Bucket allows you to set up dream campaigns and have others give towards your dream. Whether that dream is education, travel, family, or material items. DreamBucket.me gives you a tool to raise the amount you need from the people who care. Kickstart your dreams by creating a dream campaign or two now. Just go to DreamBucket.me to get started.
Okay, we're back. Now I wanted to start diving into actually calculating if it's a good deal or not. Now this can get a little, I don't want to say complicated, but it can get a bit confusing if it's your first time dealing with this. So everything has been laid out on our website. You can find it at realbusinesstalk.com. In the blog section, just go under the podcast and you'll be able to see this episode. You can also find this information at wearerealty.com. Wearerealty.com. WeareRealty. That's the website for my Los Angeles-based real estate broker firm. And there's a ton of information on there if you're interested in real estate, especially somewhere in Southern California. Even if you're interested in real estate anywhere in the world, I have a wide range of brokers in different states. So feel free to reach out to me for any questions or recommendations for where you live. So when you're really looking for property, before you even start getting into price, you need to look for something that is going to be easily rentable. You don't want to get a condo in the middle of nowhere that's a 40-minute drive from the closest town and expect that to be rented and occupied 94% of the time. Not going to happen. So you want to find opportunities in areas that are going to be constantly busy. My favorite is around schools and universities, especially in big cities, because then you have the regular effect of the city and the demand that's already there. And then the schools usually bring in a fairly good turnover where they'll stay for, at least a year, probably 2 or 3 years. But they're usually fairly steady on those payments, those rentals. America has really become a renter nation. 53% of the population in the United States of America rent their property. Only 32% actually own property. So there's a big gap of people that are actually piggybacking. But it's amazing how this rental trend keeps going. Not only is the trend going up, that causes more demand for rentals, which means the prices go up. So the prices on rentals are now at a premium, but the prices on purchasing are also at a premium in some areas. Depends on your market. But you want to find an area that has a good amount of traffic, an area that's well desired, a place that you could see yourself living in a different situation. So let's dive into how to calculate a property's expenses. On the website, you can find an investment property form. And here you can download, it's just a simple Excel. It's going to have everything that you're going to need. So you can plug in a price of a property, and then you can go in and really start looking at all the costs associated with that property, and then punch in what you expect to get for rent, and see if that's a good investment. That's the first step, is crunching numbers on the actual property. Now, in some markets, it's hard to find a good property, especially at the right price point to make it make sense. Especially in LA, we're having a really hard time with investors in finding the proper properties that are going to give them the returns they're looking for. So you have to be realistic with your returns. Before, when the market was crazy back in 2005, 2006, you could easily get 20% return on that property year after year. Today, it's more like maybe 10%. But if you don't have a mortgage on that property, it's even better. So we're going to use an example of a fourplex. A fourplex is a 4-unit building, all 4 units being destined for full-time rental. This is a simple cash flow calculation to illustrate the potential of real estate as an investment. Critical to this, as with most investments, is an intelligent and well-researched purchase on the front end. We'll assume, for our example, that this buyer and realtor did their research and made a good offer on our fourplex, a 4-unit multifamily property. Here's the purchase and rental particulars just for this example. So the purchase price of this fourplex is $1,250,000. That seems about reasonable. In a lot of locations throughout the country, it's going to be a lot less than that. But for certain areas in Los Angeles, you could possibly find a fourplex for that price. It really depends on the area. Now, let's say you put 20% down, which is $250,000. So you finance the $1 million with a 30-year loan at 4%. So your principal and interest on that $1 million will be about $4,774 a month. Now, the taxes and insurance come out to about $15,800 a year for a total monthly payment of about $6,000, a little bit more than that. So $6,000. That's a good chunk of change if it was your own personal property. Most people would really struggle to produce $6,000 a month to pay for their property. But look at it this way. If you owned this fourplex outright and you didn't have that payment, you can almost bank the majority of the rental, which you can then funnel back into your own personal property. So I always recommend, if you're a first-time home buyer, it's a bit trickier to get financing for it. You have to really find a good banker. But to consider buying investment properties before you even buy your own property. Although a lot of mortgage bankers really prefer to see you owning and living in your own property before you start investing, it is an option for some. The reason being, you can take those profits and pay off your other mortgage with it. So let's say you did your research and you see a steady rental demand for these units, all of which stay occupied for most of the time. However, to be prudent in their calculation, we put in a 6% vacancy and non-payment risk. That's going to be calculated to anticipate the real cash flow. This is basically a buffer. So the units are all identical and they all rent for $2,300 a month. At least that's the projected monthly rent. So given this, let's see how everything kind of breaks down. So the gross rental income on a property like that, you calculate $2,300 times 4 units times 12 months, which would actually be $110,400 per year. Now let's take the mortgage payment that includes the taxes and insurance of $6,091 and multiply that by 12 to give us the yearly rate. So you're paying $73,092 per year on the mortgage, but you're taking in $110,400. Now the previous owner's repair expense on this property was about $1,700 per year. We had a few repairs here and there, but when you purchase the property, I always recommend that you get a home warranty. It's going to cover all the major repairs. It's going to cover the appliances, the piping, the electrical, the AC, air conditioner, heating, water heater. These are huge items that if you weren't covered, it cost you thousands of dollars and really suck all your profits out. So generally, a home warranty these days is only $60-70 a month, or you could pay for it yearly. It's definitely worth it. You think months and months go by where you don't have to use it at all, but that one time that you do pays for it over and over. Okay, so then you're going to calculate the vacancy and credit loss. So we estimated that at 6% of the rent, or $5,472 per year. So that's 6% of the rent, which comes out to $5,470 per year. That's basically a buffer. So, for example, if you lost a tenant, they had to move out, they got a new job somewhere, they couldn't, worst case scenario, they couldn't pay, you had to kick them out. Well, that gives you about 2 months that property can sit vacant. Hopefully that doesn't happen, but just calculate that in to be safe. You may even want to raise that number to 12%. It's up to you and your threshold. So insurance and home warranty on this property would equal about $340 per month, or $4,080 per year. Let's say that the owner of the property spends about $400 each year on advertising costs and miscellaneous costs to manage the property. Those are the basic operational items that go into this cash flow calculation. So let's take our calculation to the profits. Let's really break everything down. So we start with the rental income of $110,400. And we subtract the vacancy loss, the payments, the mortgage payments, the expenses, which include insurance, warranty, repairs, miscellaneous advertising. And we subtract all that, and we're left with about $25,656. That's for the year. So this property is going to profit over $25,000 a year. Now, if you divide that into months, you're looking at about $2,171 per month in positive cash flow. That's after paying all your expenses. You can pocket that money and do what you want with it. You could put that back into the equity of the property. You could put that back into your pocket. You could save it up and then go reinvest into another property, which is what I would recommend. So analyzing your return as cash on cash invested, basically saying you put in a cash investment of $250,000. That was your hard cash you put in to get the property. Now on your annual return, so your rate of return for your hard cash investment is about $2,600 a year, which yields to a 10.4% return on investment for your cash. So every year, you're returning about 10.4% of your money. So in 10 years, you've made your entire investment back. That 11th year is complete profit. Not only have you paid it back, you still retain the asset. So you could sell it off and now you've doubled your money or more. This means that you're going to receive a steady flow of income each and every month you own that property. Do you think that's a good investment? The benefits don't stop there. The mortgage principal repayment. If you did take out a mortgage on that property, you're paying off that mortgage and increasing your equity value with each monthly payment. Make sure you don't miss a payment. This is important to get a good property management company, which we actually didn't factor into these numbers. So you can talk to yours, and they generally charge a percentage rate. Some of them charge a monthly fee. They're going to be responsible with keeping track of all of these numbers, making sure everything gets paid on time, making sure the funds are collected on time. So if you mortgage the rental property and you're using the rent to pay the monthly mortgage payments, you're also reaping the benefits of having someone else pay down your mortgage. And when you pay down that mortgage and you have equity in the property, you can then loan on the equity to purchase another investment property. It really is like the real life version of Monopoly. You just keep buying more and more houses. Sure, it takes time, it takes effort, and you definitely need a good amount of cash up front. But if you have all those things, this is the best option you can make. Besides, the only other thing that I would say might be a little bit better is opening up your own business, and it produces more cash flow than $2,000 a month. But that's also a lot riskier. You're not talking about a hard asset. You could open up a business and it completely tanks, and now you're out all your money. So you have to look at the risk rewards here. In terms of investment with a minimum amount of risk, this is it. Because the worst case scenario is the market turns, it goes downward, and the actual property that you bought it for is worth less. You lose money in the value of the property, but really that doesn't matter, because as long as you're collecting rent payments, you're paying it off. So it doesn't really matter what the value of the property is, unless it goes down so much that your rents have now gone down and your rents are now lower than the expenses. Then you're in trouble. So you have to really watch out for that. Now, there's a lot more information online about this. You know, I've talked today about why I think cash flow property is the best investment you can make for yourself and your family. And while with rising inflation rates, the uncertainty of the stock market with even bad returns on that, especially the low returns on saving accounts and bonds, there's no better time to buy investment properties. And condos have an easier time reselling than single-family homes. So I highly suggest, if you're sitting on some cash and you want to protect it and grow your net worth, to look at buying investment properties. I'm Robert Crawford, coming to you from Santa Monica, California. You can reach me if you have any questions at all on realbusinesstalk.com or see my real estate company at wearerealty.com. Have a great day.
As part of Keller Williams Santa Monica, the largest brokerage in Los Angeles, the We Are Realty Group has a wealth of resources and expertise ready to assist with your next real estate move. With over $1 billion a year in transactions, we are fluent in the sale of real estate and the unique challenges of each property, consulting with your best interest at heart. That is why our bar is set to be your most trusted and chosen real estate broker. Ready to buy or sell your property in Los Angeles? Call me now. That's 310-363-0147. That's 310-363-0147. Find your next home at wearerealty.com.